Good evening, um, everyone. Welcome to today's forecast. Today's date is the 28th of January, 2024. And I think we've had good sales so far. And we are hoping that the coming week is going to be more profitable for us. So let's dive into it. I'll be showing us a couple of things. And this is a weekly chart on DXY. And this candle will be closing in a matter of few hours. And closing this way tells you that it's correcting, and probably price will be pushing down. Now we are almost at the point where we expect a change of pattern to the downside and probably would have corrected the move. And we said that this point here is where we expect this change of pattern to occur between this zone or here. And of course, it may break above this level, but if I were you, I'll be looking strongly at this level to make a sell of DXY on the weekly time frame, and probably not beyond this point here. Okay, I don't expect to break above 104.710, but uh the lower time frame structure will clarify. In as much as we are concerned, I believe that the three weight structure is what we expect, and price may even break down from here. But in terms of what we expect, in terms of the technical analysis and completion, we still have a little more upside to go. You know, if you look at it, it's like 1, 2, and a 3, and that is it. This is almost being completed. Now, if we go into the 1 hour, so 1 day time frame, I'm not going to go into uh, 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 the US index because it's pretty much the same. So we can see this one as a move, a run, and this a complete move. And this now, this is where we expect, our 5-wave structure. And after the 5-wave structure, we should be coming down. And this is the point I said we should be looking for our sell between here and here. We should be looking for our sell, but it shouldn't break here, which is this resistance here, which is 104,800 or 104,700. So this area is 104,580 or 104,600, between 104,600 and 104,200. Within this area, we should begin to sell. Now, that is what we are seeing here right now. So now looking at the 5-wave structure here, we may say on this time frame, on the daily time frame, that this is like a 1 and a 2, a 3 and a 4. For structure, I think we need one more leg to the upside, and from there we are correcting to the downside now for us to gain one more leg to the upside. And after that leg, you should be looking for your sell to the downside, and that would have completed your zigzag. Now, we have said a couple of times that zigzag, the C leg may be an extension of 100, 1, 2, 3, but not more than 161.8. But even at 100, that we said 100, not in all cases does it actually take 100. It may fall just short before your 100, but most of the time it will take 100. So you must be looking for your sell entry once you are getting close to this area. Now, if we go into the 4-hour time frame, there is one thing I want us to also know on the daily time frame in terms of the main move and the correction. This is the main move to the downside. And what we are seeing to the upside now, it's a correction on the daily time frame, or even on the weekly time frame. Yeah, on the day time frame. So this is the main move. And this correction to the upside is just a correction to this move. Now, if we come here also, This is a move, this is a correction, this is a move, this is a correction. So we must know what a correction is. So going down to the 4-hour time frame to look at this structure. Now, this is the structure now. You will think that the main move is bullish. It's not bullish like we have said. We have seen it on the daily time frame. So the main move is coming to the downside, but this is going to the upside. And we have seen that this is a structure of A. In the middle here is a structure of B. And the structure of C, this is where we are, and we say it does not look as if it's complete. It does not look as if it's complete. So looking at this area, we may see this as a 1, A, B, C of 2. This is a 1, A, B, C of 2, and we may have finished with 3. Okay, now a wave 3 may have finished here. We are doing a wave 4. That is what it looks like. So this may be A and a B and a C of 4. And this C could go to break this low or not, you know, and it could get truncated. But we are seeing this correction. It may be the last correction to the downside, which may break this or not before we go to the upside. That is what we can see here. Most times, if we go to the daily, can daily help us to see anything in terms of movement to the downside? Daily may not really help us here. What we must not break here. In fact, we don't have to even come here to break here, because if you should break this low, we're in the down trend again. That's what you mean. If you should break 12800, 182.800 to the downside, we're already in the downtrend. So we should not break here. So we may not see much information there. On the 4-hour time frame that we are trying to analyze now and see, this is the structure here that we must not break. You know, this is 1 here. If you go up, this is a structure of B, A, and the B here, and the C of B. This is the A of B, B of B, and a C of B. You know, a C of B ending in a truncation, or is not extended. Yes, you can see that the A is more down than the C of B, and for us to have this. So this structure here must not be broken, and we are trying to go up now. And so we may take this low or not before we go up. It's a structure of 4 that we are seeing here, and can anything help us here to know where this can fall? Is we take this one as an A and a B, we may extend 100, but no more than 161.3 to the downside before we go up. Let's go to the 1-hour time frame for me to show you what I'm trying to say here. Let's go to the 1-hour time frame. Now, nothing is stopping the price from actually falling here. Nothing is stopping the price. The price may continue, but in terms of structure, we believe that it is not yet complete. It is not yet complete. That's what we believe. We believe this one may still go down, break the low before going up. We need one more leg up, and after that leg up, we are coming down. So do I want to sell? I should be looking for a sell now, but do I want to sell now? Structure must be taken to the downside before I believe that I want to sell, you know, but it doesn't look complete for me to sell. So this is the point we are trying to look at now. Not this point. This is an A B, and this is the C. So we're trying to look major at this point. So if we major at this point, let's go inside here. So we are seeing this as what? As this finished a C to the leg, a C leg down here on the 1-hour time frame. A, the B of B, and a C leg, or a WXY structure here. And we see a 1, A, B, and a C of a 2. So when we see that as a 2, we are seeing this as a 3, like a 4 of 3 here, a 3, a 5 of 3. Then a major 4 is what we are doing. This may just be A of a major 4 and B of a major 4. And this is what C of a major 4 for us to turn up again. So it's corrective. Let me bring that down for me to show you what exactly we are talking about here. So we can see this that, okay, the height here marks 1 and this marks 2. So, and we are seeing a structure of 4 and this is 5. Yes, of course, this is 5 of 3 finished the whole of 3, and we are seeing a major 4 for us to have 5 to the upside. Like I was telling us that we need to break out of 161.8 of this. I think during the week we're done with 1, 2, 3. We're done with 1.4. We are almost taking 1.6, and I think this is where we believe 100 should take us to. That 100 should take us here. Okay, that's 100 extension, which may get truncated. So, but we need to see, and this is the point I'll be looking for, a sell to the downside. But we need to see what is going to happen here, really. So, having said that, in terms of what we expect, if this is A of 4 and this is a B of 4, okay, another thing it could be is that this may actually be a 4 and this may have ended 4 altogether, and this may just be a wave 1 of the 5. Now, so what will make this to be a wave 1 and this is a wave 2 is if it does not break low. So if it should break low here than A, it means it's an A, B, C of 4 that has ended. But if it's going to get and push up, then without breaking low, then it could be 1 of wave 5 and a 2 of wave 5. Then we are going to do a third leg. So we must understand how this thing works now. And that is, you know, your knowledge of trying to look at, because it could correct 4 as a single wave structure to the downside like this, and that's all to it. And it starts a wave 1, a wave 2 of 5, then it goes up to do a big 3, a 4, a 5, and it finishes it. But now, if we say that this is still A, B, C, which is not impossible, it could be A, B, and a C to finish 4, or it could be a 1 and a 2 of 5. So we need to see what this one is going to do. In that case, if we are thinking that it's an A, B, C, then we look at the extension of this or retracement to the upside of that B of A from this yellow line here. So it's about maybe 0.88 or 0.8. So it falls within zigzag. So if it falls within zigzag, so what we are saying that if it's still a C, then it can break lower, because if it's a zigzag, it's going to break lower than here and it's allowed. So it means that if it's going to break lower, we take this to yellow from that top and we take this back here. So I want you to pay attention. So if that is the case, it means that our 100 is going to fall on this red right here. Oh, sorry. Our 100 is going to fall here, right here. That's where our 100 is going to fall. And our 161.8 is going to be here. And if that 161.8 is going to be here, that is too deep, and it would have broken 1. Of course, in an ending diagonal, it will encroach, we know that, but it should not go beyond 102,700. So anything below 102,700 tells you that we are in the downtrend. So that's what we are saying, that we are using our knowledge of what we know. So, and let's see again, that 1, 2, 3, 1, 2, 3, or 1, 2, 7 will fall here. So bear with me if I take a little of your time. I think it's worth it for you to understand how, the inverse correlation or the way we interpret structure inversely, if it's going to mean an uptrend or a lower trend or a correction. Now, this is 100 here. So this is 100, 1, 2, 3. Price must not break low here. Anything lower than here, we are in a downtrend. So price must not even break lower than here. So, but in terms of what we are seeing as a structure of 4, if this is a structure of 4 of C started from here, a 1 and a 2 of C, and this is 2, it shouldn't break below a 50 retracement. So from 2 to 3. Now 50 should be here. Then 50 is really above here. 50 is here. Maybe I should just use a green line somewhere. A green line somewhere that this green tells me that a dark green here tells me that I don't expect 4 to, I can even use yellow. I don't expect 4 to actually pull beyond, to even test 1, 2, 3 extension. Let me use yellow. Good. So based on analysis of this structure to the upside, I don't expect, if it's going to be a zigzag of A, B, C of 4, it will take the low of A, but it should bounce back between the zone of 50 or 100 here to the upside. So if that happens, then we now begin to now count structure of the last wave 5 to the upside. Then you now know it's wave 5 that we are counting to the upside. But in case, it's becoming very cumbersome. Let me go to the lower time frame for you to see more clearly. Now, going to the lower time frame to see, we had said that this is 100 extension in case we are counting an ABC, and is going to come here, in here, to finish an ABC for us to move up. Okay? Now, if that is the case, we may test not beyond there. We won't test 123. We won't even come here before price bounces up. But in case they pull a fast one of us and a manipulation on us, it should not break here. If it should break down here, they are not manipulating. They are telling you that the new wave is to the downside now. So we are shifting to the downside. But for now, we still have, it's not complete up, there technically. We still need one more leg to the upside and the last 5 waves. So, but if this one will form a 1 and a 2, then it should not take the low of 85 to the downside. So which, if you now say this is 1 and this is a 2 of 5, and this one has finished 4, so what we are saying is that this as a 1 and the one coming down as a 2 shouldn't take the low of 85, which is where this green is. So it should turn up from here. And know that price is not perfect. It may take 90 and bounce up, but it shouldn't take this low. So if it doesn't break this low before it goes up to break this structure up, then you should know that this is 1 and this is a 2, and we're going to do a 3 to break up. But if it takes low to come down here, no confusion. It's just A, B, C of 4. Then we are counting a new structure or a new wave to the upside. So having said that, let's take that knowledge and let's go and use it on euro dollar. The structure of euro dollar, it's a bit different from what we are seeing. And we have already said that within this zone, this is where we expect a change. You can see this red line here. Price should not even come here. If we're going to take an 100, so, and we must be ready to load our gun. Price may take here because 100 sits on here. So the wick, it will just peak like a week and begin to come down. So I don't expect price here, at all. We don't expect price here at all, but we're going to watch and watch and watch and see what's going to happen. So let's go to euro dollar. Going to euro dollar is the same thing. It looks like it's complete in terms of three-wave structure, which is A, which is a B, and a C. The C could get truncated. Either it breaks above here or not, it doesn't really mean anything. Just like I explained, this is looking like the structure of 4, even though it's funny looking here on euro dollar, it's funny looking here on euro dollar. We are seeing this as probably a 1 and a 2, a 3. 3 may have completed here. This might just be A and a B and a C of 4 for us to turn to the downside. Just like we did with US dollar index. So let's go to the 15 minutes time frame and bring out those drawing. Now, this may be A. This may be A of 4. And this may just be B and a C to the upside to break above here. Now, in this case also, know that it looks more like a 1 here than a B, because this has eroded the possibility of this one coming to the downside as a B. But again, we should trust DXY and US dollar index more than euro dollar. So because if you are going to look at this retracement, it's more than 90 itself to the downside. From that point, you can see that it's more than 90. 90 is here. It broke 85, broke this. So on US dollar, on euro dollar, it's looking like a 1 and a 2, more of like 1 and a 2. And if it's more of like a 1 and a 2, then it should not take 85. It should not even break this at all. It should not. So in that case, I'm not saying that don't behave like robots. Don't behave like robots. So if it shouldn't break 85, so, or let's say 90, it means that the retracement from here shouldn't take at least 90, and is almost at 85 here, and 90. Okay, let me leave that there and say, okay, and so this is 90 here. So 90, this is 90 here. So in between where the price is at the moment, that is where we expect this to go down again. So in between here and here, without breaking the 90, we should expect, if it's 2, to be completed. And again, if it's going to now be an A and a B and a C, then we should be looking at what the structure of 4 should give us normally. If that is what it is, then we are going to look at an extension 2 of what an ABC of 4 should give us, which is if it's coming from here. It's not, it doesn't look like it, but you must be prepared for anything. If it breaks above or not, it doesn't change anything in terms of wave count. It just tells us, oh, it's the beginning of wave 5 of the end or not. So the 100 will now break above here. And this is where we should be expecting it, where the green is. Where the green is will be the 100, and 123 is going to fall right here, or 127, and a 161.8 is going to fall right here. We don't expect price to take 1.09500 for now, or let's say 1.09600. Price should not take in case you are afraid. Price is not going to do all of that before it begins to come to the downside. Even if it intends now shifting direction and going up, price is not going to take this level for now. This is a point of resistance, zone for price before it goes down again, if indeed it wants to turn up. Now, having done this, we said this may be A, B, and a C should fall from here. If it breaks above, then it's going to turn down again. And if it's going to turn down, it might take the top, crush it, then go down to break the bottom. And if it's now coming down, we know it's now counting a new wave 5 to the downside. But if it turns down from here, so this is a 1 and a 2. And just like you said, if we look at the structure, the bigger structure, to see what is giving us, I want to believe that you are following. This is where the 2 is. This is where the 2 is actually. This is a 1 and a 2, and we believe that this is a 3. So in terms of the bigger structure, it shouldn't take a 50. From here, which is the 2, to the end of 5 in the purple. So a 50 price indeed should not go beyond here to still make it a 4. So technically, we are saying that price should not take 1.09200 before it falls. So I'm going to break that on Euro USD. So if you are already in a sell, what we are saying is that I don't expect price to take this, even if it's going to be an A, B, C. But if you're afraid, put your stop loss. Sorry for that break in transmission. So here, 9,200 price should not take it, but you could just put it at 9,600, 0.9600, while we wait for all the rubbish that you want to do, in case it's going to take above what we think is 1 and a 2. Then if it's a 1 and a 2 and begins to fall, then we begin to look at our ending diagonal from here as a 1 and a 2, a long 2 to the downside, probably a short 4 and a 5, then we are turning up. So we are almost there to turn to the upside. Where I wouldn't really expect it to break this trend resistance for now. So we should be expecting a reaction. So that's what I'm saying. That is what I can say. This may not get to a point of 100 extension. If we go to the upper time frame, this is an extension of 100 here. We may get here or not, which is around 7,400. We may get here or not, but we are going to be paying attention. If this is 1 and a 2, probably a 3 will come around here, a 4 and a 5 may touch here. but we're going to be pay attention to that structure. You must count it as a 1 and a 2. And if it breaks above and come down, then what is coming down, it will be a 1 and a 2 and a 3. If this one is not a 1 and a 2 now for a 3 to come, then it might mean that after breaking up, we start counting a 1 and a 2, a 3, a 4, a 5, then we turn up. So that for Euro USD. Then let's turn out to gold and see what gold is giving us. I've given you levels and I can't do more than that. I've given you levels, I can't do more than that. So let's look at this lower time frame in terms of how do we read these really? How do we read these? Let's look at 15 minutes time frame. Now, looking at 15 minutes time frame, relatively, this is an impulsive structure and this is a corrective format. So it means that with what we are seeing, gold is likely going to come down again and break the bottom. So this is an impulsive structure to the move to the downside, and this is correcting. Okay. Now, if you go to 1 hour time frame, what do we see? We see this as an impulsive movement to the downside, and this is correcting to the upside. So in terms of what we are seeing here as the first move to the downside and this move to the upside, this is seen as a 1 and a 2, a 3, 4, 5. The move here, it looks like a 2 because of the way and manner it has gone to the upside. It has taken about 161.8 as retracement of this whole move, and that's why it's a bit funny. We were expecting a 1, 2, 3, a major 4. It has broken beyond a major 4. It has taken more than 60. It has broken this structure to the upside. And so if you are trading, you must be very careful trying to trade gold because of what gold is doing. Because we were still expecting, a major 4 and the fifth leg to the downside. But it has taken more than 61.8 to the upside. And this may just be beginning of a new move to the upside, which means gold may not take the bottom. So if you are trying to sell here, you must sell with a tight stop loss, and you must be very careful. We need gold to go down more, probably go down more, take more than 85 or 76.8 of this whole move to the downside for us to be sure that gold is ready to go down. And if this one goes in a 3 corrective format, a 1 and an A, a B, and a C, that means we are going up again. So we need to watch it here, but this movement for now is sharp enough to the downside. That is what I can see on a 1 hour, a move, a correction. On a 15 minutes time frame, a move, a correction. Then if you look at a 4 hour time frame, on a 4 hour time frame, we still see this as the same move and a correction. Now, the appearance of this price action, on a 4 hour time frame is highly suggestive that price wants to come down. Looking at this price action rate at the very striking point of a retracement of 161.8. But if I were you, I won't move my stop loss. I said we should put our stop loss at 2038.5 or maybe around this area. There's no point in moving, because for now, if price is ready to move to the downside and continue to move, price should not break this resistance here. So price should not even take 2036 if we are going down. So if I were you, if I put my stop loss at 2037, I think it's okay, because I don't expect price to come down and take this structure to the downside. I do not expect that to happen. If this is to be taken seriously. So you must know how you read, even though we think that price may not have completed structure to the downside as a 1 and a 2, because this for us, it's like an A around this area, A, B, C, of B, and that is a C wave to the downside. So this C wave to the downside looks incomplete, but of course, we may have just done a 1 and a 2, and a 3, a 4, and a 5, and price is ready to turn to the upside. But now, this is where we have to interpret our move and say, in case price wants to go up above here, then it means that price is already going up. But for now, we are taking this as a good price action for us to break the low again. So you must know how to interpret that. Price, we are looking for a buy, but price may shock. With the price action, take the low before it goes up. That is what I can see here. It may not have completed its move. And if you think we are now seeing this as a 1 and a 2 and a long 3, you'll be shocked, because price may just make these ones within a C itself as an A, B, and the last C, 5 waves, and that's all. And that's just, so it may likely turn out to be like that, and an A, B, and a C, and that's all. Because you are looking for a 1, 2, 3, and a 4. Price has nullified that, and you are confused. So you must be ready for anything here. But price may take the low or not on gold. So if you now go back here as an A and a B, so it's not a 1 and a 2. If it's going to be a 1 and a 2, it means that price is going to go deep down to the downside, and the structure of DXY and US dollar index does not suggest that price is going to now give you a long structure of a 1 and a 2 and a big 3 to the downside. No, it's more of within with C itself as an A, B, and one more leg to the downside. Anyhow, we must be expecting a reaction at least at an extension of a big A and a B of 100 or thereabout. So if that is the case, we are expecting a reaction to the upside around this area of 1990 or 1980 now, without taking the low. And if it takes low, this is highly corrective. You can see it's highly corrective. If you don't know what correction is, you can see this movement here. Bam, within 2 weeks to the upside. What has prices been doing? 1 week, 2 weeks, 3 weeks. This is the 4th week, and we are entering the 5th week, and it's still correcting. So this is a correction. It's not a major move to the downside. So we must know that that is what we can see clearly here. This is within 2 weeks. The major move is within 2 weeks, and corrective more than 1, 2, 3, 4, and we are entering the 5th week. So I just believe that it's going to just do an A, B, C here, and probably react here and go up again. So whatever structure is coming to the downside, if we are going to come to the downside, we should be looking at what? At a 5-wave structure, what is going to give us 5 waves, and we are turning up, and not more than that. But for now, having said that, what I have said is that this is the zone that price must not break. Like the 4-hour time frame here, price must not take this resistance to the upside. So that is a point of 2036. And if you go to the 1-hour time frame, on the 1-hour time frame, price is not expected to take beyond here. Price may just, if you're not in a sell, you should be looking for your sell entry in this zone. You are going to watch for reactions in this zone, but I might just think that price may just come here, walk in here, and it's not giving a clear ABC format to the upside. It may just, okay, it may just have done an A and a B on this time frame, I think what would help on this time frame is to see the move here. Okay, let me help us, because on the lower time frame it's going to be cumbersome for you. Here, from between here and here, is we may take that as an A. So there is a wick below here. I don't want to turn to the lower time frame. You won't see it at all. So let's use this. The best approach will now be on the 1 hour time frame to see the low of this wick as your B. You know, so if you're able to see that as your B, then you can easily A to up here, B here, then we are looking for a 161.8 maxed between 100 and 161.8 as a point for this thing to go down. So if I now go to 15 minutes time frame now, so it will be more clearer for us. So see the way it is now. So you see that if you had wanted to use these, you are confused at this point. So for me, I would take my B, looking at the 1 hour time frame from here. I will take my B from there. So that is the use of the higher time frame to help you to know, you know, what correction and what is happening here. So we may have a zigzag to the upside. So in that case, if I'm looking at a point to begin to look for a sell, I'm looking at 100, which is not going to enter that zone. The 100 is going to be at 230 or 2031, which I believe this is going to break to the upside. They're going to shock you. Break it to the upside. Price is going to take that to the upside at 100. Then a 123 price may likely make nonsense of that too. The 123 is at this edge, or 127 at that edge. So you should be looking, that's at 2032 or 2033. So you should be looking that price will not make it past 2034. So if I were you, I may just put a sell order at 2034. If I put a sell order at 2034, then I will be watching for what the reaction is going to be below that level to know if I'm going to change my entry level. That is what I would do. I'll put a sell order at 2034, 500. 2034, 500. This area is an area that I may be looking for a sell. So if I do that, I don't expect price to break above here, then I'll put my stop loss very tight. Very tight. Very, very tight. In case price wants to do otherwise. Price has no business taking this up. Taking it up, of course, we don't also forget the fact that in case we are doing a 1 and a 2 to the upside, because that's the way it's looking like now. It's looking like, okay, this last movement to the upside, after this move to the upside, you know, it's a B, not a 2, a B, and this will now be a 1 and a 2, then we are going to the downside to finish a 5-wave structure, just like I showed you on the upper time frame. So if we take that from this place down to the low here, a 90 must not be taken, and your 90, even 85 must not be taken. So I don't even expect price above here from the price action. So there's nothing stopping you from putting your stop loss at 2037,500. Yes, 2037,500. You can put your stop loss there. So if you are selling at, you want to sell at 2034,500, 2037,500, that's like three pips is okay. And with that, I've come to the end of this forecast. Do like, share this video, and subscribe. Thank you. Bye.